Everyone wants to earn handsome from the share market, but the irony is that they do not have any knowledge about the share market. If you ask anyone, you'll find that their knowledge does not exceed the average limit. So let's go ahead and strengthen our knowledge on the share market. How does the share market work? Well, the share market works in the following manner. First, a company gets its listing in the primary market through an IPO. Second, shares gets dispensed in the secondary market thereafter. Third, the stocks which are issued can be traded by the investors in the secondary market. Fourth, stockbrokers and brokerage firms are identities registered with the stock exchange that offers you to buy particular shares at prescribed price. Fifth, your broker passes on your buy command to the exchange, which searches for a sell command for the same share. Sixth, the process takes 1 to 2 days or so, which means that you will get hold of your shares deposited in your Demat account in the coming 2 working days. The stock market is one of the biggest places for investment. More than rupees 5 to 6 lakh crore valued stocks have been traded in the 2 stock exchanges in India on certain happenings. Stock market investing is often called a bet, a speculation, or gamble. It would cease to be a bet if you get the basics of the share market right. But before you delve in this market, you should gather the ground level information of the entire arena to develop your level playing field. Well, how does the share market work? For that, let us add all the puzzles together and get the correct picture. A stock exchange is a stage where monetary instruments like stocks and subsidiaries are exchanged. Market members must be enrolled with the Stock Trade and SEBI, that is the Securities Exchange Board of India, to direct exchanges. This incorporates organizations giving offers, intermediaries directing the exchanges, just as brokers and financial backers. All of this is managed by the Securities and Exchange Board of India, that is SEBI, which makes the principles or the norms. Initially, an organization gets recorded in the market through an initial public offering, that is the IPO. In its proposition record, it records insights regarding the organization, the stocks being given, etc. During the posting, the stocks gave in the essential market are designated to financial backers who have offered for something very similar. When recorded, the stocks gave can be exchanged by the investors in the optional market. This is the place where the majority of the exchanging occurs. In this market, purchasers and vendors accumulate to manage exchange to create gains or abolish their losses. Stock specialists and financial firms are entities enrolled with the stock trade. They go about as a go between you as a trader and the stock trade. Your broker passes on your order to buy to the exchange, which searches for a sell order for the same share. Once a seller and a buyer are fixed, a price is agreed, that is finalized upon unanimously. The message is then passed on to you. Even at the broker and the exchange levels, there are multiple parties involved in the communication chain, like brokerage order department, exchange floor traders, and so on. However, the trading process has become electronic today. This process of matching buyers and the order is placed, then the broker sends it to the exchange. Then exchange finds counterparty, then exchange confirms to broker, then Broker debits credits your accounts. However, there are n number of investors. It is impossible for all to assemble in one location and exchange their trades. This is where stockbrokers and brokerage firms play a significant part. Once an order is placed to buy a particular share at a set price, it is processed through your broker at the exchange. There are various parties involved in the process backhand. Meanwhile, the exchange also does confirm the details of the buyers and the sellers to ensure the parties don't commit fault. It then carries on the actual transfer of ownership of shares. This process is called settlement. Earlier, it used to take very long to settle trades. Now, this has been brought down to 1 to 2 days. For example, if you conducted a trade today, you will get your shares deposited in your Demat account by the day after tomorrow. That is 2 working days practically. Well, the exchange ensures that the trade is actually carried on during the settlement. Whether the settler has the required stock to sell or not, the buyer will receive his shares. If a settlement is not upheld, the credibility of the stock market is gone for a toss. It means trades may not be upheld. As and when trades are conducted, share prices change. This is because prices of shares, like any other goods, are dependent upon the perceived value. This is reflected in the incline and decline of demand for the stock. As demand for the stock increases, there are more buy orders. This leads to an increase in the price of the stock. So when you see the price of a stock rise, even if it is marginal, it means that someone or many placed buy orders for the stock. Larger the volume of trade, greater the ups and downs in the stock prices. Now, let us come to the most interesting part of this video. That is, how to make an investment in shares. Well, to invest in share market, follow the method or procedure that is mentioned. Step 1. Realize your investment requirements and limitations. Step 2. Be firm on your investment strategy. Step 3. Make an entry in the market at the right time. Step 4. Perform the trade. Step 5. Monitor your portfolio timely. Now we come to step 1. First, comprehend your investment requirements and limitations. Your requirements should consider into account the present as well as the future. Step 2. Once you understand your investment profile, look through the stock market and decide your investment strategy. Find out which stock suits your profile. Step 3. Wait for the favorable time. Time is of utmost importance in the stock market. Merely getting the stock right is not enough. Your profits will be optimum only if you buy at the lowest level possible. The same applies if you are selling your shares. This needs time. Do not be impulsive or in a hurry. Step 4. Conduct your trade either online or on the phone through your broker. Ensure that your broker confirms the trade and gets all the details right. Recheck the trade confirmation to avoid errors and get the real profit. Step 5. Monitor your portfolio regularly on regular intervals. The stock market is dynamic and ever-changing. Companies may seem profitable at one moment and not so profitable the next, due to some factor or the other. Ensure you regularly read about the companies you have invested in through any journal or websites. Hope that you will become a smart investor now on and gain enormous profits from the share market. And yes, don't forget to subscribe to the channel for future learnings. Thank you.